Hello and welcome to Currency Call. I'm Manisha Gupta. Let's start with the US dollar, which is trading firm after no hint on QE3 coming in from Fed there. Investors have unwind their bullish bets on high-yielding currencies as we see US dollar at a 2-week high versus the euro and a 3-month high versus the sterling as well. 75.4, nearly a percentage point of a gain coming in the dollar index on your screens there. The euro in the meanwhile has continued to decline, holding below 1.43, just above 1.42 actually, as the European Union Council's 2-day meeting started today. Markets would of course take a look at the austerity plans and also about how the Greek debt position actually is solved there. In Asia, the China factory growth stalled in June on weak global demand. We saw the numbers coming in weaker than what the markets were expecting. Much of Asia is trading in the week, and ditto is the case with the Indian rupee as well. 7 paisa down on your screens because of the strong euro, because of the weak euro and the strong US dollar there, though some exporter selling is what prevented sharp declines in the rupee, is what treasury guys tell us. For more on the currencies, we are now joined by Abhishek Goenka. He is CEO of India Forex Advisors and he joins us right here in our Mumbai studios. Abhishek, hi, welcome to the show. Let's start with the rupee first. And 45 though hasn't breached quite successfully, but we really seem to be headed towards that.
Of course, as I mentioned last time in your show, that we are expecting 45.40, 45.50 to break further, and maybe in a couple of months time we might hit 46 also, seeing the kind of scenario that has been developing in India, you know, right from all kind of deficits, external debt, bad monsoons, you know, high inflation. I think we are entering into a kind of a new normal in case of India. You know, we have to live with high inflation and suffer growth. You know, growth should come down. So I think rupee should head towards a 45.5, 46 in a couple of months time.
Abhishek, those are the domestic cues that you mentioned, but there is lots happening in the international markets as well. The dollar index has gained quite a bit, and the way Fed has come across, the way there are uncertainties in Europe, all of that seems to be supporting that currency.
Of course, you know, dollar index I think is going to be a little bullish at this point of time, and the kind of things what has happened yesterday in terms of ending of QE2, which is now quite certain it seems, and you know, it seems that a dollar is likely to get stronger and dollar index is likely to head towards 76.5, 77 or maybe 78 also in a couple of months time, and I think it's going to drastically affect the Indian rupee, and of course the euro we're expecting that it should head to at least 3 to 4% further down because of the concerns that we have seen in the Greece, which is not going to end despite the fact that we are going to see some bailout happening on that front.
Since you mentioned about Europe, and Greece is not the only concern, there are conditions about Spain, and there was this IMF statement telling that it could go on to core countries as well. In that light, do you see euro going below 1.40 as well? And for coming couple of months, how would you trade that currency?
See, euro is a currency which has to be shorted at this point of time. Earlier also it was a currency which was supposed to be shorted, and now also. Now what we expect out of euro is the levels of around 1.35. Maybe in a couple of months time, until unless we see some kind of buying happening from the Chinese guys, which we saw last time, which actually moved the euro to at least 15 big figures on the upside. But I feel this time it's a problem with not only Greece, as you rightly said, it's with the entire pigs, you know, the Portugal, Ireland, Spain and the Greece countries. And this time, you know, there's a lot of lending which has happened to the you know, these nations by the bankers over there. So there's a huge credit risk which is actually happening. If you see the Greece you know, bonds rates has gone up to 28%, which is extremely high. So I think this time it's going to be a little tough, and I think euro is going to move down.
How do you look at Asia in that light? Because if you look at the latest Chinese data, that has been on the weaker side. Today's data on factory growth of course has stalled almost there in the month of June. How do you look at most of this Asia in this light?
See, Asian currencies definitely is going to not be bought so aggressively the way it was bought earlier. Definitely in terms of, since we are supporting the dollar, I think it would go slightly weak, not very weak as compared to the developed nations economy currencies, but Asian currencies would be some, there would be some weakness in the Asian countries, because we are going to see a flight of dollar coming out of these currencies and going back to US possible, or you know, emerging markets are going to get a little bit you know, sold off, I think. So Asian currency is not too good. Rupee definitely going to be an underperformer as compared to the other Asian majors.
How are the commodity currencies? Because in the recent days or last couple of days for that matter, we have seen Australia dollar also decline, and that's quite the cue around. The Japan also is facing, their PM may have to step down, is kind of, protests that are coming in that part of the world. How do you look at commodity currencies, Japanese and like that?
See, if you see that post QE2, what happened was, Japanese bonds were bought. Now again, if you look at Japan, we are sitting at around 80 levels, which is again almost all-time low. So that means the risk aversion is acute in the market. Now, as per the commodity currencies like Australian dollar, Canadian dollar, everything is concerned, I don't think that the commodity currencies are a very good bet at this point of time, because as you see, the Chinese PMI data was also not pretty good, which is showing that the demand is kind of slowing down. From the emerging market side, again, due to various causes and various problems, I think the demand is not going to be so good. So I think commodity currencies, I'm not very bullish on the commodity currency at this point of time. I think we should expect at least 3 to 4% more fall in these commodity currencies, which includes all the commodity currency, I would guess.
All right, Abhishek, we'll let you go at that. So some more decline coming in for the high yielders, Australian dollar, euro, Indian rupee, all of that could see some decline in the coming few days. Put your money in US dollar is the cue coming in from India Forex Advisors. With that, it's wrap on this segment of Currency Call. Thank you for watching.